Yo, what's going on my people? HumidityLiquidity here. Welcome back to a brand new video. So in today's video, we're going to be looking at NASDAQ and live trading it and what I think is going to happen. So yesterday on my video, I said we're going to trade up to this breaker block or this fair value gap, this order block on the daily. Now, if we look at the 4 hour, we've come into this breaker block and it's rejected from there. CPI is injected that liquidity to take us down. Now, we're at 930. Now, what happened? 930 came up for this fair value gap. Now we have broken structure right here. Since we've broken structure, what do we look for? The fair value gap. And here is where we're looking to enter. Right here. That's the preferred entry. Now, the take profit, I would look for take profit down here. This is where I would be looking to take profit. If I want to take partials, I would take partials at this fair value gap or at this low right here. So these are all the areas. So let's just wait now and see what the market wants to give. Okay, so let's have a look at this 3 minutes. So we have this order block plus fair value gap. On the 5 minute, I think we will retrace back into this fair value gap up here. Either after this 5 minute candle closure or right now. It looks like it's happening right now. Okay, so here we take our sell. Okay, stop loss above here. Let's have a look over here. Okay, so we could come in, if we come into 50%, I'll be looking to take an extra entry if we come to the 50%. If not, then this is the only entry, and that's absolutely fine. So here's entry 1. See if we get offered another entry. Let's have a look for an SMT as well to confirm this sell idea. So we've had this low high, high high. Okay. We've had this low high high. We've had this higher high, and then these relatively equal highs. This area here could use that or this. Let's have a look. So it did wick above a little bit, but this high over here, this wick to there, it did not break above. So we could just use these candles right here. So it didn't break above. So here we have a SMT, then break above on the US 30. Okay. Now, are there any more smaller SMTs? No SMTs on the lows. So we should be continuing the upward flow. So right here, 5 minute candle closure. We could tap this order block area. Come to this 50% of the fair value gap. And then that would constitute us to get in a re-entry. Okay, so I'm just going to put this, line that up. So that's in line with the order block. Okay. So now I've come into the 50%. Now I'm going to re-enter. I have one more entry. Okay. Now we could have a look at premium and discount from this high to this low. 50% is up above here. If we just put it to bodies instead. Okay, so same area, but we might not come up into there. If we look at the S&P, we came into the 50%. So by that logic, we can use it on NASDAQ. Okay, so here we're wicking. Now we want this candle to close below this line, or on the body to close below the 50%. Okay. So it closed below the 50%. It did wick for a second below here. But let's see what happens. Currently, price is manipulating. Over here, this is a manipulation. So now we're just waiting for price to come down now. So as you can see, we're closing, the bodies are closing below the 50%. So yeah, now we're just waiting for price to displace lower. Okay, so 5-minute candles, 1 minute left. So 1 minute 20 seconds. So within that time period, we should see some sort of move down for it to be in line with our bias. Okay. So here, price is moving. Had a little bit of a displacement. Still waiting on the 5-minute candle closure. I want to see how it closes. If we close inside this area, then the next candle should give the direction. So let's see. So this will be an inside candle. If we don't break out, if we don't displace out of this area. Okay. And if we see an inside candle, usually the next candle is the one to make the big move. Although this is low time frame, price is fractal, so yeah. Let's quickly have a look at something. Okay. So here's our expansion phase. Okay, so this 5-minute candle closed inside of the previous 5-minute candle. So by that logic, this next 5-minute candle should give us a decent break. Yeah. So here, let me just move this, make it cleaner. Let me make the take profit this one. Okay. Okay, so now we wanna see a break of structure. So far, so good. Price is moving away. Now this is what we want to see. Okay, we haven't got any SMTs on the lows, so everything's all good. And no SMTs on the highs. Apart from this one, of course. But yeah, so this is the current SMT we're looking at. And now we've displaced down. Model has formed. Now we've come up into this fair value gap, come up into the 50%. I had one entry over here. Let's quickly get executions up. So yeah, one entry over here and another entry at a 50%. So yeah, just simple stuff, following the models, following my rules, and yeah, 50% bare entries. Here, just waiting for a nice displacement below this low. And then, yeah, we're chilling after that. See. Okay, so we currently have to move 115 points. Okay, so 22 seconds on that candle closure on a 3 minute. So I would prefer it to be a down close. Let's see what happens here. Was potentially just gonna do some weird stuff and maybe do it over SMT or something. But here we could say that we've come up into this order block. So yeah, we could say we've come up into this order block. We haven't tapped the bodies of it, but we have tapped this order block, so that could be where price is just looking to seek. Okay, so let me just drag this out a little bit. Okay, so now we want to see price continue to expand lower. That 3 minute candle closure was not what I prefer, but it is what it is. Let's see what this gives us. Okay, so it should be going down now. Now, if we don't go down within the next 2 minutes, we could just be forming an SMT with one of the pairs, which is possible, but I don't think we are. I think we're just playing about here. So we have 20 seconds left on this candle. I want to see this candle, this 1 minute candle, will close bearish. Now if we close bearish, then that is definitely the preferred type we want to see. Now if we close bearish, we'll enter one more time. If not, then okay, so we did. Just give it a few seconds. Okay, there we go. Okay, give it one more little entry. Okay, so now let's see how price reacts. Okay, so let's have a look. What happened here? So let's move this. So the order block, it wicked above. We've come in, taken this. Okay, so there's no SMT. So it looks like price has just come to take out some sells. And now should be dropping. Let's have a look. Are we? So this is the 75 level. So if we look at it from an institutional level perspective, so the 00 or the round figures and then the 50s and the 75s, we look at it from that, we see that price has rejected from there. So yeah, the 75 level. Not really liking how price is moving, but we're still respecting. I wanted to see more of a displacement on the 5 minute, but let's see what happens. Okay, so we're getting our displacement. You see we rejected off the 75 level. Okay, let me just remove that. Okay, so we're currently still in that range of that 5-minute candle, but let me just remove that. Still looking for price to come take out this low. Once we displace below this low, this trade should be golden. But yeah, let's just wait and see what price does. This candle should be closing bearish. If this candle closes above the 70 level, then I'll be closing the trade, and I'm not interested today. But according to my bias and how price just moved from the 9:30 open, we should be going down. So here the 9:30 open price has not been tapped, but on the other indices we can see that it has been tapped, and now we're above it. So yeah. Okay, so now let's have a look on a 5-minute, 15-minute. Okay, so we reject on the 15-minute. This is good. Okay, this is what we like to see. So here, let's have a look from this high, hold up. So we got onto OTE entry from here to here. Yeah, so we got a perfect 62% entry right here. Okay, and then we can use the projection of the 1 standard deviation right here, which is close to the take profit I have. So we'll just use the take profit I currently have, and then yeah, so that's take profit 1, and take profit 2 is down here. Okay, so now we just wait and chill. I would just take full profits at take profit 1 since I already pyramided. Okay, so now once we break structure here, I'll move my stop loss to this level, to this high up here. So that'll be where my stop loss will be. And if we come back up to that level, then this trade will be invalidated and I don't want to be in it. So just reduce my risk a bit. Let's have a look on a 5-minute, let's see what's happening. Okay, so I think we can move it now. If we do go up, then this isn't a trade I would want it to be in. Okay. Okay, so we're breaking this low. Let's see how the candle closes. Okay, so currently looking good. Let me just break even on my live, and now we just wait. Okay, Okay, so we did close a little bit below this low, which is fine. So I'll count that as a valid break. So now here, coming to this fair value gap. So I think so from what I'm seeing here, this wick rejection was the reaction from this fair value gap caused by this fair value gap. So now it's given a little retracement from that fair value gap. And here would be another entry if I were to enter from here. I would enter this. But already entered 2 or 3. Yeah, I entered 3. So I'll just leave this. Okay. So now we're just chilling. Here was the other entry. Let's have a look. Okay, so the other two indices went into the fair value a bit more. Okay, that's fine. Okay, so stop loss can be moved to break even. Let's have a look. So all these wicks, we don't want to see price come back up there. Okay, so I'll move my trade to break even now. If we do come back up here, there is this order block, but that's not a favored area for price to come into. Okay, so now that reaction from that fair value up to 15-minute one is now done, given the retracement, and now we should be coming down here, and then we should be coming down to the 12,111 area. So yeah, exactly how I said it yesterday, how I would be expecting price to take out yesterday's highs, come into this breaker block right here, and drop down for sell-side liquidity. I did give you the scenario for bullishness if we took out this high, but now we have clear order flow direction, and usually trading after 9:30 is the highest probability time. 9:30 to 11 o'clock is usually my highest probability time. And for those of you that want to think about a 90-minute cycle, you can see that 9:30 to 11 is a 90-minute cycle. Now do whatever you want with that information, but yeah, that's just something to keep in mind if you didn't notice. But yeah, so here, fair value gap entry, no more fair value gap entries, so we can't really just wait in. We do have these small fair value gaps here. Okay, so here we have a rebalanced area. Let's have a look. Can we potentially get entry from here? Maybe we can, but I don't think so. Okay, So here, just keeping everything simple once again, following the trade plan, following the model, and executing precisely. So 3 entries, risk-free now, and about to make 37%. So let's have a look here. So we can just reject from this fair value gap. It might seek one right above here, but all in all, we have established order flow, and we should be rejecting down to this level at least, which is only 70 more points. When it comes to 1030, I usually like to look for an expansion from there for at least 120 points. But yeah. So now, just gonna chill. Let's have a look at the other ones. So this one tapped the fair value gap as well, all of them. Okay. See, did we get that small SMT? So here, low high, high high, high high, low high. I mean, you could be entering off this, but yeah, this is a small SMT. If you really wanted to be a risky trader, you could be doing this type of stuff, but we don't recommend it. These types of SMTs are more high probability, and yeah, so price came into this fair value gap. This should be a fair value gap on the 2-minute, but yeah, came into this area. The body's closed below this fair value gap or around it, so it's all good. So here, just talking you through the thought process, and yeah. Okay, let's see how these candles close. However, all in all now, we should be fine on the direction right now. We should be going down for sure. So yeah, here, let's see how could you have gotten in. So getting in over here, the only possible way you could have survived in this trade is if you took an entry and your stop loss was above the breaker. But if you tried to sell on CPI news, you would have got absolutely demolished, and then price would have went your way. So yeah, you shouldn't have been trying to get in at this time. You should always try to get in after CPI, once the market has shown its hand. Okay, so here we're going above a bit. Okay, we have this 5-minute fair value gap that we can use. We also have this fair value gap that I marked out. Let's look at the 5-minute. Let's see. So this 5-minute fair value gap, that area I was talking about earlier, this area around here, it's where you could look for potential entry. Just said I didn't think it would come up here, but looks like we are coming up here. So yeah, pretty much taking out this wick mitigate this wick, and should see a continuation down. So if you look on S&P, come into this fair value gap, and yes, 30, we're still in the same fair value gap from earlier. So yeah, should now continue down. Let's see. So we opened, went up, and now we should go down. I would enter one more time, but 3 entries is more than enough. And they're all next to each other at break even. So we're chilling. So there we go. So yeah, here is the trade. Simplicity is key. Be reactive, not predictive. Like I said earlier, if price was to displace higher, I would have been looking for buys, but price didn't displace higher, just came down 930 displacement. It did have a bit of slow action within this time. Would have preferred to see it just instantly reject and then come down, but you have to adapt and see what the market gives you. It's always good to have a stop loss above the fair value gap or even above here to be safe. But yeah, your stop loss placement will be refined with experience. So yeah, don't worry too much about that. Yeah. So let's have a look. Can we get into this breaker block? Not preferred area. 20 seconds left on this 1 minute candle. Now I prefer to see this candle close bearish. If not, then we could see a bit more of a retracement. Let's have a look at the others. Is there anything special to look at? Okay, let's see. So that wasn't the preferred closure on the 1 minute, but let's see what happens now. We could try come into the 50% of this area, which I wouldn't really like too much, but that can happen. But yeah, all in all, correct bias. I'll take some partials right now. Okay, so one partial taken over here, and then the next partial, or take full profit at this low. So yeah, here we've come into this 15-minute order block. So that is most likely what is giving us this reaction. We still have 3 minutes left on this 15-minute candle, so we should be dropping. Now this candle closure being bearish would be exactly what we want to see. If it doesn't close bearish, then we're most likely looking at price coming up to 50% or maybe a deeper retracement. But yeah, so this should be the high of the hour right here. These highs should be the high of the hour. And then if we look at this time interval, we should be given an entry here, assuming I'm correct. So yeah, so 10:14 to 10:18. Oh look, you could look for a entry if the model presents itself. If it doesn't, then no entry. So yeah. Okay, so these closures are good. So I'm gonna see. Okay, so now I'm just gonna let price action play out, since it might take long and I just don't wanna keep waiting for no reason. So yeah, I'm just gonna step away from the charts, and yeah, hope you guys enjoyed. Hope this was insightful, and I'll see you guys in the next one. Peace.
You have two choices. You can try to eliminate risk by learning about as many market variables as possible. I call this the black hole of analysis because it is the path of ultimate frustration. Or you can learn how to redefine your trading activities in such a way that you truly accept the risk and you're no longer afraid. When you've achieved a state of mind where you truly accept the risk, you won't have the potential to define and interpret market information in painful ways. When you eliminate the potential to define market information in painful ways, you also eliminate the tendency to rationalize, hesitate, jump the gun, hope that the market will give you money, or hope that the market will save you from your inability to cut your losses. As long as you are susceptible to the kinds of errors that are the result of rationalizing, justifying, hesitating, hoping, and jumping the gun, you will not be able to trust yourself. If you can't trust yourself to be objective and to always act in your own best interests, achieving consistent results will be next to impossible. Trying to do something that looks so simple may well be the most exasperating thing you will ever attempt to do. The irony is that when you have the appropriate attitude, when you have acquired a trader's mindset and can remain confident in the face of constant uncertainty, trading will be as easy and simple as you probably thought it was when you first started out. So, what's the solution? You will need to learn how to adjust your attitudes and beliefs about trading in such a way that you can trade without the slightest bit of fear, but at the same time, keep a framework in place that does not allow you to become reckless. Trading presents us with a fundamental paradox. How do we remain disciplined, focused, and confident in the face of constant uncertainty? When you have learned how to think like a trader, that's exactly what you'll be able to do. Learning how to redefine your trading activities in a way that allows you to completely accept the risk is the key to thinking like a successful trader. Learning to accept the risk is a trading skill, the most important skill you can learn. Yet, it's rare that developing traders focus any attention or expend any effort to learn it. When you learn the trading skill of acceptance, the market will not be able to generate information that you define or interpret as painful. If the information the market generates doesn't have the potential to cause you emotional pain, there's nothing to avoid. It's just information, telling you what the possibilities are. This is called an objective perspective, one that is not skewed or distorted by what you are afraid is going to happen or not happen. I'm sure there isn't one trader listening to this audiobook who hasn't gotten into trades too soon before the market has actually generated a signal.
I'm going to DR. She got no tickets, no luggage, and she's just in DR. And police called. My grandfather had to come pick her up at the airport. She told the cab to take her to DR. She had no money to pay the cab, and she wasn't going to DR. She had no ticket. Like, she just is crazy, bro. Like that bipolar joint is really rough, bro.
Bipolar disorder.